How are we doing? Welcome everyone to another Traders Community podcast. Welcome investors, traders, punters, and dribblers of all persuasions out there. Hope you've had a good day, a good week. We had a break yesterday. Living the life, living the dream. Pretty well everything's going clockwork as we settle down ahead of a big data week for the rest of the week, with culminating with the jobs number, the US jobs number on Friday, a bunch of data out tomorrow as well, inflation, manufacturing, etc. Remember, not to be construed as financial advice, just experienced traders sharing what they see, thoughts, wisdom, and perhaps a lot of dribble, some may say. But seriously, sharing what the bigger desks are looking at, what those that kind of run the markets, algos, etc. We've experienced been a fantastic couple of weeks here. So let's go through what we saw today. We're going to talk obviously about oil and gas, big EIA report, what's going on in affecting that over there in Russia, OPEC, and little things like that. Couple of big stock moves. We had a bit of a dribbler special today with PATH, one of our dirty dozen. Got wrecked after its earnings to the tune of about 27%. RH, the former Restoration Hardware, was an interesting play. We weren't in it, but what's of interest was the CEO's comments and the market's reaction on that, relevant to the economy. We'll see where the bond market is. And that's about it, really. We got the glorious Madavi here. We got Meta Johnny hanging out there in the wings. So let's get into it, eh? So where we are as far as oil goes, we had a good bounce back to 107.47 right now. S&P still over 4,600, though it did pull back a little bit. The Russell was the one that had the major sell today, got down, tested that 2080. 2092 as we speak. As you'd expect, one thing we've been pretty clear on this run up, the more quality, the mega caps is what took it up, the dribble stocks, and why we mean that is the dribbler favourites really struggled, and hence PATH's another one of that. And if you go through the index, now an important differentiation is between dribbler and punter stocks, big difference, and easily construed by the dribbler. Natgas, 556, pretty well basic, hanging around that 550 area. Nasdaq bounced off its lows, was trading almost down to 15,000, closed up at 15,1110, and Vol did come off its lows, but still pretty well down there. Bonds had a stronger day. Okay, let's get into it. Let's look at the SPOOs. So remember, the SPOOs pretty clinical. We've had that breakup on the trend. We're still in that trend on the weekly. There's some weird feedback coming there, Madavi. I'm not sure if you hear it. Do you hear it, mate?
Some what?
There's some weird feedback coming there. Sounds like coming through there.
Yeah, see if it's from me or not.
Yeah. And then on the daily, yeah, that it's pulled off a bit there now. On the daily, we ran into that breakdown level we talked about on Monday, and you can see we came off that. And all we really were doing was rebalancing the Chico. There's plenty of room for profit taking to be taken by the smarter punters that got this rally. You can see it's pretty clear 1, 2, 3 pattern. So remember the bearish count, A, B, C. Remember the bullish count, 1, 2, 3. So the key is how it all does it. You know where your support is in the bigger picture, that cloud and tanking, and all that confluence right there. As far as Murray, we're just banging between 6/8 and 7/8 on daily. On the 240, we can see all day. Remember, we've just been watching this Chico over here rebalance, as I just said in the daily. Pretty measurable. We had one breach of the tank in here 2 days ago, and we had one here today, and we recovered to close at it. Chico was tested here and tested. It was the only trade today from a trading point of view was, and you'll see it as we go shorter term, was shorting the plus 2.8s today. It actually got almost a 3.8s here on the 240. So they gave us a nice little short of about 30 handles. Not quite that. When you see on the 5, you can see what we're talking about. So did it very, very clinically on all those multiple time levels. So even on the 5 minutes, it's plus 1.8. And you can see it dribble down to minus 1.8. And it was a slow dribble. It did accelerate here. There was different comments that triggered the algos, much to do with, there was like 3 Fed governors, I think, today, talking about 50 basis and things like that. We did have the ADP number out this morning, and that's all on the website. Strong number. And that's the March report. Well, it's on February, but coming out in March. Is that correct? Yeah. It's going to be the March. So it'll be released as April, but it's March. Sorry, I'm getting confused because Friday, April Fool's Day, so who knows what they come out with, will be the actual BLS number dropping. This is the ADP. It's slightly better than expected, as you construe, but a lot of people watching these, particularly one of the main things the Fed is talking about is employment growth and how it's strong. And there's a few, I want to say Barkin was one who talked about it. Anyway, we came off and you saw that great bounce off minus 1.8. So again, just trade off the machine if you can, with the machines. Just be it, here's the Dow was the strongest of them today. And you can see on the weekly, it's well above all these levels. The Cajun, the 50, and Tenkan. So we're in that megaphone. You can play around with this if you like. Those who use Gann flags and median lines, it's a healthy balance inside that to use it. Remember, the whole point of having a structured plan is you know where you are and to keep you honest and emotional. You don't want to be, as I said, these were wonderful buying opportunities, and I saw a lot of the dribblers out there on FibTwit telling people not to catch, falling knives, etc., etc. So those same dribblers are the ones telling you to buy here, but they're not. All they're really doing is, just remember this, copying other people so they can't be wrong in the belief you don't pick it up. And there's a lot like that out there. So just be wary. I mean, that's obviously what CNBC is, an analyst, but specifically the concern is those that have, large followings, and just because they've got large followings, other people will follow them. So again, go where the professionals are, and remember how many lose money. It's like 85-90%. So be wary. And now obviously, for this to go down, good people were selling, good people were buying, right? It doesn't just happen on whims. So just remember that. And the Dow's just a little bit easy to see. Okay, let's bring Madavi on. And, well, let me bring up the Nasdaq. May help. Here we go. So here's the Nasdaq today, mate. Do you want to...
Yeah. All I did today, because it's the first time I've seen Nasdaq could break it. I thought this thing could break down. I shorted it. Then I came back from the close and I put in a bigger short. And, it bounced and it basically wiped out the gains I had from the morning. So that's what kind of day I had in there.
Yeah, it was kind of... It kind of mirror imaged the SPOOs. And so, as I said, all I did today was that one short, covered it. This went a little bit overside. I can see why you added to it. Because this broke down, whereas the SPOOs held this minus 1.8 level. And all I did was that short. I didn't put any length on or anything. So
I was having a good day. Then I just went, I was like, man, this could be a first time in like 2 weeks the Nasdaq's been down. So I just went all in, man, for the last 30 minutes. And the last 30 minutes started rallying.
Yeah, so, and it is, so there's so much noise out there as far as bonds. You're seeing people comment about the switches and, going into negative on the 2s and 10s and all that sort of stuff. These often happen, and usually they're a mass deflection or rebalance, almost like a cheek out. Over history, yes, they can become from recessions and depressions and all that. But keep in mind, so this week and last week, there's a lot of new bond issuances. There's a lot of weird stuff going on bonds, as we said, with corporates, with commodity bonds, all the stuff going on in China with their credit situation. So it's very hard to compare these to different times when you got central banks intervening, printing money, some raising rates. Do yourself a favour, go and read what the Swiss said yesterday. It's on Traders Community. What his thought was on monetary policy. Basically, he said monetary policy ain't going to solve the financial problems. And they're much more conservative and realistic. So people that are betting or making financial decisions as in thinking it's secure on monetary policy with central bank, particularly yes, it's a big run from zero to here. As far as the Fed goes, 0 to a quarter, really. In bigger scheme of things, it's not. It's more about liquidity and what's available. So look at the curve that way. Also, the other important thing to look at, and Madavi made this point earlier in the year, part of the reason of flattening the way they have is because it's what the US, remember who the biggest borrower is? It's the US government, US Treasury, whatever you want to call it. So you got to control what you can, right? So just apply logic, and again, beware the dribbler. I would not listen to anyone opining about the bond market who has never traded it. If you haven't been in there, it's kind of like when I was playing. And if I was playing, we'll look at those stocks real quick too that we're talking about. If I'm playing footy, and the guy's never played it, and he's my coach. It's even more so in these financial markets because they're brutal. A bond pit, if you've been in it, is brutal. An oil pit, if you've been in it, is brutal. So beware. So just use common sense, look outside the box, and listen to those that have been in there, right? Very careful. Be very careful. And of course, those that haven't been there are never wrong, and they're masters of everything. I was talking online about our friend Mandy in Australia, who's really good at market psychology. We're having a laugh about all that. Check her out. Great follow there too. Okay, let's have a quick look about the stocks we were talking about. So we have our Dribbler Dirty Dozen, which you know a lot of them, right? So PATH, which is UI PATH, is the name of it, was an IPO a year ago, I guess now. Has it been a year ago? Seems like it. I think it was less than that. But anyway, that's one of our Dirty Dozen. Basically this one actually is starting to make money, so maybe it goes out of this into the investment, not portfolio because we short it. Well, I guess it's still portfolio, but it gives it a different recognition, right? I would have to look at their cash position following. Anyway, they missed earnings. They got wrecked by 27%. They got down to minus 3/8. So we actually we did buy a little bit here, trying to have it bounce. This seems a little bit delayed here. It's trading back over $23 now. So let me just put that on mute. Is that the PATH director calling us? Only joking. So you can see our next levels of resistance, minus 2/8 and minus 1/8 is 24.20 and 22. I could bring up that other chart. Let me bring up another chart for you. So basically this company, the reason they're down so much was they missed on... They missed on, I'm going on memory here, mate, on repairs and maintenance, and their margins were lower, and they lowered in their guidance, it decelerated. Many of their customers are in Eastern Europe, Ukraine, Russia, that sort of thing. That's the basis of their warning. But let's look at... and the other interesting ones with warning, as I said at the top of the hour, and we're going to look at both these charts, was... RH Restoration Hardware. So let's look at these things we always look at. Mullen had a good bounce today too, by the way, which is one of our punter stocks. I didn't partake in that though, Madavi. We're kind of full at that point. It was right around oil time. You see that one?
Lulu, nice day too.
Yeah. But I'd love to say we did Mullen, but we didn't. We usually take a break after a while, let them redevelop.
I'm in Mullen.
You did it?
I'm in Mullen.
Oh, did you?
I'm in it.
Oh, nice trade. So
I thought you were in it.
I kind of missed it when it was right when EIA number came out.
I mean, it was just right around the 290 mark, $3 for a long time. You just start breaking a little bit now. But I bought it earlier. I had this thing since like 240.
Yeah. So that's where I was looking at it. See here. This afternoon, it held all this 220, 240, and then it basically, when the market started selling off, it started pulling up. So I never chased it. Unfortunately, I was looking to build a position here once we saw some positive volume. The volume came in here. I'm guessing there was a news item on it because look what happened, right? Volume really picked up around 2 o'clock there. Or 1 o'clock. So, yeah, nice call. But, again, I missed that one. But you can see when the main thing in these is there's a lot of volume, a lot of interest. They're thematic, meaning it goes in a sympathy play or a group play. So, today in the morning, and we'll talk about that in a minute, the cannabis stocks was a buy the rumor, sell the fact. We took profit on them and actually shorted some of them. And so when that came out of play, I mean, these are more punter stocks, meaning the money's going to move with them. And so Mullen has been very good, still maintaining decent volume. And then the catalyst got it going again. So unfortunately, I did miss that one. Been a busy day with a lot of other things. So UPATH is the one we're talking about. So let's go. So yeah, nice trade there, mate, on the mighty Mullen. So UPATH was saying, so this is going to be where a live look at it. The other one was a tad delayed.
I got out of some for a little bit over $1 profit. I'm still holding some of it, but I got out of a nice chunk of it.
Which one? PATH?
PATH.
Yeah. So
you did. I'm trying to make a little more than $1, because it's down $9. But I didn't like how it slowed up. I don't want to be stuck in it either.
No, so I actually, for full disclosure, got out of it just before we did the podcast, which is like 04 or something. So I got 60, but you stayed with it nicely. Kind of a weird thing, people. So if I sound like I got the crap sometimes, it probably is because I log out one of the execution platforms to do this properly. We tried it once, remember that? It sounded like, what do you call those guys with the high voices? So anyway, it got down, as you can see in the, this is a 3-minute chart. You can see it's already recalculated. But the reason we bought it was it was minus 3/8. And you can see that here. See minus 3/8. On the 5-minute, we've recalculated down here on the 3-minute, which is given interesting of the time value. And so here we're bounced back up. So this is a little bit delayed. And so this one's live. So 23.57 is right here at minus 2/8. Remember, we were saying that's your first target. First target's actually in between the two because of this spit. I do notice there's some gaps down. Look at this gap at 25.20, 24. So there's, and that's the other reason. I know that's why I got out and why you're just mentioning. There's a lot of vacuums in these stocks, right? There was positive divergence here, and this is why you watch volume. And you can see basically there was heavy selling volume here, and it dissipated and started to move up. Sorry?
I just added to my Mullen.
Oh, let's go back to Mullen. Yeah, I don't know how that one got under our rainbow. I'll blame that on Johnny.
Yeah, yeah, I'm up a little bit, so I doubled my size.
So here's another good look at it. Mullen, you can see what I probably should have done was have a buy stop in order above all this because it had a little bull flag. And you can see it got over it, but we were watching a lot of stuff today and just got off the radar, unfortunately. Stayed on Madavis. Unfortunately, we were in different places today. So
I blew back most of my cash at the close. So
on the foots, yeah.
30, 40 minutes.
So the only futures trade I did today, remember, was just that one SPX or ES.
Yeah, that's all I did. I did one. I shorted it and added more, and I got whacked.
Yeah, I only did one and took profit and walked away.
Right.
So Mullen was, geez, that was a good one.
Yeah, this path looks like it might make another run. I still have some. I reduced my risk, like $1 profit.
So look back at par. So the other one, we didn't actually.
I'm hoping to get up to 25.
Johnny, so let's look at, there's par 2342. So let's look at, so Johnny did, if Johnny's here, he's on a conference call right now. So he did a put spread on RH, so Restoration Hardware, which probably when everyone's.
Doing a split, by the way.
Sorry?
They're doing a split.
Who is? RH?
All right.
Yeah, so they had a big earnings miss and they were down. I mean, how much was it? Is it showing here? It was down. Well, so this is aftermarket, but it was down massive today, as you can see on the chart. It's been falling for a long time. You can see a gap down. We didn't do this last night, but a gap down last night on earnings, and then so I want to say he's done like a put spread. I think 30-20, something like that. But anyway, you can see even acceleration earnings at the end there. What happened is kind of interesting, and you should go read the CEO, I think it's CEO and the CFO's conference call. Some interesting points. He made a point that, and so they lowered their guidance when all that. So what this is an expensive furniture store, right? Hipsters, dribblers, all that sort of stuff. So I'm more an IKEA and Costco man.
It's high-end furniture, basically, right? They make the real good stuff.
Well, I don't know if it's real good, isn't it? It's not antique.
High-end, bro. Go on their thing. If you find a chair for less than a couple thousand, I'll be surprised.
Right. I would refer it as more overpriced dribbler quality, but.
Well, it's real wood. It's not like stuff you buy at IKEA. You sit on it one time. It's traditional stuff that you're supposed to have, but it costs too much now.
Right. So what the CEO made a point of was he dropped, I think it was 11 or 12 points in profit. I'm not sure what he's basing that on, if that's sales numbers or just his points, when Russia invaded Ukraine. And then at the same time, don't forget you had inflation go up, and he mentioned that. He did a big spiel basically about inflation, saying that he called out Janet Yellen. She said that it's going back to 2% when it was 4%. Now it's 7.5%. So it's good that he called him out. Then he also, I found this interesting, Madavi. He then likened the current market, and I think he mentioned BlackBerry, to the Big Short, where everyone's in one room. If you've seen the movie, I'm sure we've all seen it since podcasts. So they get a phone call, hey, your stock's down 25% or something, everyone goes out of the room. But anyway, some good points of what a lot of people are thinking, probably. And it just shows that inflation is impacting. It is impacting.
It really hit hard. This stuff's expensive to begin with, and then with inflation, and the materials he uses, they're kind of...
Oh, yeah, that's true. He mentioned that too. He mentioned some of the materials, the inflationary impact, but also the fact you just can't get them for supply. Anyway, you can see how the market reacted, right? And so the reason we're talking about it is not that we have a position or anything in it, is that it's very relevant for the economy and things like that. And so what's important, there was a bunch of Barkin and a few other Fed people spoke today. So if jobs stay strong, then obviously you can maintain, or you hope you can maintain driving your car, eating food, etc. But something like this, which would be a luxury item, as Madavi's pointed out, all of a sudden became superfluous.
When home prices going up, people have been spending a lot of money for high-end furniture in a lot of their homes.
Yeah, I guess I don't do that, but hey.
Yeah, I just sent you a link. I got the link, mate.
You're trying to tell me to buy a Mullen the other day. Now you're trying to.
No.
I got you. Yeah, so it is definitely high quality stuff, and we were kind of having a laugh there earlier. But it is certainly affected by the market, and that's the important thing to look at. So if you're looking at investments, be very wary what you're buying. Now, obviously, if things change and they get overdone, and you mentioned they're doing a split too, you said, right?
Yeah.
So that's going to be interesting if that has an impact, if it starts bouncing or something. So I have no position and probably won't, but pay that over to other stocks. For example, you saw Bed Bath & Beyond, and we didn't talk yesterday, that's also in the meme stock because of Cohen, who's been very good at, he was Chewy, GameStop, etc. That's a lower end of merchandise, so perhaps that does better. It's not furniture, it's home products and etc. But worth keeping an eye on a lot of these companies. Now, I know valuation isn't a thing with a lot of companies right now. It's gone back to that dribbler market or the bull market. But as I said, the dribbler stocks aren't going up. It's more the punter, meaning momentum. I mean, we do the same thing, really, on those sort of stocks, right? You can see Mullen's a good example. But even energy stocks, we'll talk about that in a sec too, like particularly one that we talked about on Monday. Let's have a look at, so this is talking about that. So Southwest Energy, SWN, as we've talked many times, they're on I-45. I go past them every second day. This is a big natural gas guy. These guys were pretty well done. They the higher prices, rebuilt them, I guess. They saved them like Oxy or whatever. They've also they picked up a bunch of new properties. But at the end of the day, for those in it, they've been struggling, right? It's one of those ones. So what it did happen, because of its lower price, it got on a lot of these lists, people say, and it got upgraded the other day to $9. So we took a pretty sizable position, as we full disclosure the other day, about a month ago, and then we added to it yesterday. Pre-market on nothing that I know of, but it ran up ahead of. So we watch all this on a matrix. Pre-market, it actually got to 760 plus, but it got over 750. We dumped everything here. This was way outside the course on other valuations in this industry, what Natty was doing. And this is a Natty play, not an oil play. So the relevance is, and why I'm mentioning other people get involved, they buy them not knowing what they're buying, right? And remember, Madavi and I, we mentioned probably a month ago now, we did all those low floater oils companies, so we knew that were all crap. Remember that? IMPP, HUSA, NPV, way overvalued. So this is a real company. This isn't in that ilk. Not to say some of them aren't, but valuation. But you can just see. So you want to look at. This is why I'm very, very big on differentiating between investors, traders, punters, and dribblers. Yes, we do have a bit of fun with it. It is a boring little world, the finance world. But it means different quality of people. So when fast money's in, fast money gets out pretty quick too, right? And that's why I miss Mullen, for example, because I wasn't watching for this sort of thing. So just bear in mind when you're playing something like this, it's very different to an Exxon or a Conoco or Oxy or LNG and stuff like that. Okay? So there's good plays to be had. That was a short. I didn't short it, but you could have based on that, right? I think. So the cannabis stocks. So as we said, we mentioned this the other day. We played them on Friday, and we were going to reload yesterday, which is what we did, because the House, I think it's called the Moore Act, was coming up for discussion in the House, and that started today. Remember, it's got to get through the Senate and everything to vote, but again, this is a punter's area, so they love it. They love this stuff. So we bought, and obviously we sell. We don't hang around on this sort of stuff. This isn't investment material. These are all loss-making companies. They're bought on emotion. They're trendy, all that sort of stuff. So look where I got. This is Tilray, which is the best name recognition and probably the best stock out of all this, don't you think? Again, these aren't recommendations, but this is the one everyone knows. And as look where it got to, plus 2.8. So we've taken profit and actually shorted this today. These are pretty cheap shorts as well. And remember, it's not a reflection on the value. It's reflection on buy the rumor, sell the fact. And now you can see that now it's consolidated. If I go further back to an hourly chart, what Tilray's done, all that news has taken it, lifted it off the floor of like $4.80 to up here, right? So keep that in mind. So these have rebuilt. So you watch that support. What you want to see, if this develops into a continuation or it's a topping pattern. So and there's a bunch in that spec. I won't bore you with it anymore. Let's look at Big Daddy, the oil. So oil has been brutal to trade if your position's too big and you're just watching the dome, right? Your screen, right? Up and down. So, but what it has been doing is trading technically perfect. So what does that mean? That means that machines are running the game. Option books, stuff like that. And by option books, I don't mean the whole concept of gamma plays and all that you read about in the stock market. This is more season, like hedging positions, rolling, all this sort of things between months, right? This is a true market. Oil is a true commodity. So look what's happened, and this is like, again, look where it bounced from. This isn't magic, as my friend Hap would say. This is just maths. Look at this, Mado. How clinical do you want it, mate? 50. Remember we did this one yesterday. It popped under 100, but it was a 50 moving average. We went back over the tank, and then we closed on it. We did have the EIA report today, and that was fairly bullish. It was a draw on Cushing. Cushing's getting really low. This is Cushing. So these are important factors to take into account when you trade this sort of stuff. But again, take your bloody profit. Look at how volatile it is, but look at how predictable that is. But of course, if that doesn't hold, there's wreckage. So don't assume it's certain, but you can see how it's working, what's running. And if you go to weekly, you can see where it parred at, right? So it overshot. This bar is a big bar. This is like a 16-cent bar or something, $16, sorry. And look where we are, right at tanking. So that means the market's constantly rebalancing the day traders, and the big guys are picking it off. If we look at the hourly today, so you can see that, as we talked about yesterday, it's minus 1.8. We overshot the Chico, and this was our daily 50. Remember that? And look what we bounced back up to the hourly. You can see just clinically, and that's what the machines are doing. And we're talking to someone in the room today about this was sideways all day pretty much, right? So it tells you there's a lot of people trapped up here. There's a lot of people trapped down here. So that happens in any market. It's particularly speculators and stuff like that. The more aggressive hedges, that they seem to be in pretty good shape, as long as they got their bonds in order, as we talked about. Okay, let's look at Natty Gas. So Natty settled again on that high from yesterday. So you can see there's work. And if you look at that Tilray chart, totally unrelated to this, but similar price action in the sense that people are getting caught short and then getting caught long, and they're rebalancing. So it's the next move you watch. And this is on a weekly. And this is how it shows you how a lot of these markets move together, because people are predictable in an unpredictable way. Or unpredictable and predictable way, that's the saying. So what was interesting, we couldn't even get to the Tankin. So we want to see if the Tankin meets it, and you can see here. And these are very sharp ABCs. So always look at that and look at what we're retesting each time. And this was a measured 2/8 move, right? You can see all the 2/8s that work in this. So if you look at the math number of that gives you you can see that there's a pattern here in expiration levels and strike levels for hedging and things like that. So that's oil and gas. Let's have a quick look at commodities. I did mention earlier, I believe, that bonds had a slightly stronger day today. Just be wary who you're following on that stuff. It's very important to understand bonds and currencies because they kind of run the whole game. But be careful who you're listening to, right? It's like if I'm going to the doctor, I don't listen to my neighbour who knows bloody everything about everything and really F all about. You know what I mean? You know what I'm talking about, Darby. And so in the real life, I mean, what he's good at, right? And his missus, she's a lawyer. Right now, I've outed him, but anyway, he's a character. So, but similar people we see in finance. He doesn't. The bloke I'm talking doesn't go on about finance. But my point is, be careful who you listen to and listen to. It's like the whole, listen to your doctor about your health, not some bloke who knows everything in that line at Best Buy, right?
Just come to me. I'll help you out.
Yeah, you'll fix him up all right. So here's gold, which we've been keeping a close eye on because it broke this level and we're just watching how it plays out, right? And look how it's doing. It's kind of the same thing as the commodities we looked at. Violent swings, but they're all spinning around the Tankin, and that's where it closed, right? Copper we've been following. It's trying to get back over that old breakdown level. You can see there's a lot of work going on there between that and the Tankin. And the more thinner or the less liquid a commodity is, just like a stock, but commodities have heavier hedging, and so they tend to get the one way, and they can be limit up and down. You can see how they overshoot so much. You saw it in oil, 129. You saw it in here. Wheat, still weak, but look, it did do that false breakdown here. So perhaps there is hope that this whole thing's an ABC. But again, these things get exaggerated because of speculators. Let's have a quick look at Bitcoin. That's been a beast lately. So it's consolidating a bit at the top of the cloud and the 50 on the weekly. You see that? Just under 47. If we look at that and remember, this is a lot to do with Ethereum and what do they call it? The merge. Per Johnny, he's still in that conference, so I was going to ask him about it. So on where's the bloody hourly chart here? Weekly, 240, there we go. So this is what is it? Oh, this is crossing Ethereum versus, that's what he wanted us to show. So here's crossing Ethereum with Bitcoin, I believe, and you can see the change here. See how? So basically, this is Ethereum getting stronger versus Bitcoin. I think that's everything, right? ARK. Let's see what ARK did. ARK actually got over the Tankin this week. Let's see if we can stay over. This is the first time it's been over the Tankin since up here at $116 at the end of last year. So we got down as low as, it looks like under 50 or at 50. And we're bounced nearly $20 from that. So keep an eye on this. This is Look, if you're bullish, this could be 1, 2, 3, like a B, and this could be a C, right? I mean, anything's possible. So, anything else? Can you think of anything else, Madavi? I think we covered everything.
Always be killing it.
So, yeah, always be killing. Remember, it's all about jobs. You had ADP. Tomorrow you're going to get jobless claims. And on Friday, you got your jobs numbers. That's going to be your main catalyst. In between, we got some inflation numbers and other good data. We are pretty well at the end of earnings season. There's the odd thing, and I think that's why RH is relevant. Can you imagine if that war, given what he said, if that war happened just before earnings season? So it could be affected the way that guy did. So it would have given much more bearish outlooks. I guess it doesn't matter when something runs 700 points on. So it's all just money flow, right? So let's go back and finish up with
the difference between our H's, it's not everyday customers that go see that guy.
Yeah, 100%. But it is relevant just for the consumer and talking inflation.
But when the squeeze comes on, everybody gets squeezed. And since he doesn't have a wide audience, it also hurts him in a way too.
Yeah, he doesn't have as much. So when everything's good, he really only got the high end, is what you're saying. Yeah, which is interesting. Isn't that even more bearish though? Because if the high end is most likely to have spare cash, right?
See, the poor feel it right away. The rich might take a year, maybe, or longer, depending. Right. So you start feeling it lower.
Well, wouldn't you call his customers more under rich persuasion?
Yeah, people who won't feel it at the beginning, or if they're just a small, a small recession, they might not even feel it at all.
Right. But he's already warning. He's already warning.
They won't get squeezed compared to someone else who with the lower end and stuff. You know what I'm saying?
Yeah.
They should immediately.
No, I get that, but what I'm saying is that if he's already feeling the squeeze, that means the lower end's already hurting, right?
The problem with this thing is there's a supply chain squeeze too.
Yeah, he's got squeezes left, right, and center.
So it's not like a normal one where there's supply chains and stuff like that. That I think he's feeling it.
Yeah, he's got some issues.
But everybody's feeling that, right? I think everybody's got that problem, right?
Well, what's good is, from his point of view, and what people, if they looked at it, he kind of covered the base points with a lot of people that, I mean, I know nothing about the company, and I know nothing about him, but he did talk pretty candidly about the stuff that, in a real way, inflation, all that sort of stuff. So I thought it was interesting, rather than what a central banker says. And it was interesting he called out Janet Yellen, right? Okay, well, mate, guys, we will love you and leave you. Like us, subscribe us. Make sure you like. It makes a big difference. Subscribing, all that sort of stuff. It gets it out there the way they do algorithms. And the more people we have listening, the more it kind of helps. If it's relevant, if it's not, what we should talk about, what's useful. At the end of the day, we're here just to try and be useful and help guide some people what goes on in the mechanics of these markets. From what we've seen over and over, and we have our ears to the ground on a lot of different good trader networks, actually. So, and we've done a good job, I think, of culling out the noise of some of the dribblers. So, hopefully it's useful. On that note, remember, Friday is all about jobs. We have natural gas EIA tomorrow. So, a lot of positions, if not already. So, there would have been a lot of short covering up into this number, coupled with other things, as you know. So, be that. So, we will see you on the roundabout, huh? And thanks for joining us. Unfortunately, Johnny couldn't get off his call. The big fella can talk, right? Okay, we'll see.